Okay, good. Just setting up the recording. Okay, firstly, welcome to anyone new. For those that were in last week's, obviously we discussed false breakouts last week, and this week we're going to discuss first time back strategy. We're going to follow the same process as last week. I'm just going to summarize the concepts and the actual strategy. I summarize the videos that are on the website, and then I'm going to look over some actual chart examples and talk through how I would analyze the setup and determine entry, stop loss on my FLR, FLS, and then also any Q&A. Okay, so we can talk about the logic, we can talk about the type of considerations I use when analyzing the setup, then going to talk about trade management, and then going to briefly mention the other considerations. That's what I discussed in video 3, and then do some chart examples. So to start with logic then, if we have a supply and demand zone and price has a strong breakout from that zone, it stands to reason that the highest probability of that same supply-demand imbalance occurring is going to be on that first time back. Okay, if we think about, for example, a support zone, and we think about the number of touches we have on the support zone, first, second, third, fourth touch, each touch we have, i.e. each time price is getting rejected from that support, it is consuming some of the demand within that support zone. Okay, so it's using up some of the demand that exists in that support zone. So second, third, fourth touch, obviously the demand left in that support zone is getting weaker. Okay, it's pretty basic stuff, it's pretty common sense, but it does go against the traditional textbook teachings, which is the more touches you have on a support resistance zone, the stronger it is. Okay, that's actually illogical in terms of it's traditionally that the more touches you have, the weaker it's going to be, because it's consuming demand or supply on each rejection from that support resistance zone. Okay, now we have to caveat that with the fact that supply and demand is dynamic, i.e. it's always changing, it's not static, the market is always changing, orders are always changing, market participants are always changing, and how they place their orders are always changing. Okay, but from a generalization standpoint, supply and demand gets weaker within a support resistance zone or within a supply demand zone, the more touches it has, and therefore the first time back has the highest chance of having that same supply demand imbalance that caused the initial breakout occurring again. And just a reminder for people that are fairly new to supply and demand that support and resistance and supply and demand are different in terms of the supply and demand zone is not necessarily a support resistance zone, but a support resistance zone is made up of clusters of supply and demand zones at similar price levels. So that's the kind of basic logic of why, after we've had a strong breakout, we're looking to take a trade on the first return and not necessarily the second, third, and fourth return, because the first return has the highest probability of having that same supply and demand imbalance. Now, the additional reason is order flow based, and it follows the same kind of logic that we used for false breakouts. In terms of we're thinking in terms of market participants at support resistance zone and what are the type of orders they represent. And again, just like we mentioned last week, in terms of when we were talking about locations of false breakouts, we were talking about swing high, swing low points, and we were talking about support resistance zones. We're looking at a support resistance zone where we have high order flow concentration. Okay. So if I talk through this example quickly, we have the breakout rush. Again, this is from the video, and I mentioned it last week in terms of when we have a breakout, we normally have a high momentum push through, and that's because the orders, the high buy side order flow concentration that exists here, okay, relative to the sell side order flow concentration, because anyone selling here is going to have their stop loss above this range, and we're going to have pure breakout buyers going long here. So there's a lack of liquidity on the sell side, hence you see the high momentum push up, i.e. the breakout rush. Okay, so when you have price coming back on the first return, if we think about in terms of who are the main market participants or the main classes of market participants at this area, well, we have people still short who are holding on, and when price comes back, they'll be looking to get out as close to break even as possible, because they're people that were holding short from this resistance and shorting, expecting this to hold. Okay, i.e. a novice trader who is short, sweating it out, now looking to bail as close to break even as they can. There are buyers who missed the initial breakout. A break of a support resistance in an uptrend, for example, is considered trend confirmation, and buyers obviously look to buy at a discount in a trend. Therefore, you have new buyers coming in on the first return. And you'll also have sellers who are obviously short somewhere up here, price coming down, so there's got to be people selling. They will look at the support resistance zone as a logical area to be taking profit. And then if you think about what type of orders these market participants have, sellers who are short below, who are looking to get out close to break even, obviously buying. Buyers who missed the initial breakout, obviously buying. Sellers who were in profit, selling from up here and looking to take profit down here, obviously buying as well. So thus we have a buy side. We have high order flow concentration to the buy side, just like we had on the initial breakout. And lastly, anyone that did buy the breakout here most likely will have set break even or move their stop loss up. Again, herd mentality, how most people manage trades. They move their stop losses up to lock in profit and move to break even. So you're going to get a range of break even orders within this period here where price comes back to the SR, and obviously that net effect of that is selling. But you can see that the main classes of general market participants at this area are net buyers, and that creates high buy side order flow concentration relative to the sell side, just like it does on the initial breakout. And the last thing to consider from an order flow perspective is what happens in this gap here. And this is important because it tells us how price should move into our FTB area. When price breaks out of this area, it clears all the orders in this area. We know that there is low sell side orders here because of the breakout rush, and any time price moves fast, it's because of a lack of liquidity on the other side of the market. Price always moves to find liquidity, and a high momentum move suggests low liquidity on the other side of the market. And we know that's occurring here because we know what's occurring when we have a breakout. Okay, so we know we've got a liquidity vacuum of sorts because most of the orders have been cleared within this area. As I said on the previous slide, we know we've got anyone long here is likely to have a stop loss in place to lock in profit around break even. So we know we're going to have stacked break even orders, which are sell orders within here. And we know if we have, for example, like we have a mini one here, a little support area here, if we have a breakout of a support area just above our FTB area, we know that's another breakout, and therefore we're going to get the breakout rush associated with a move below the support area. And that generates high sell side momentum down into our FTB, where it's then met by high buy side order flow. And that's why we typically see a good momentum rush as we get close to the FTB area, which is then quickly reversed. That's a standard order flow based move behind an FTB. Standard price action that occurs in terms of we have the high momentum move when we get close to it, and then we get that instant reversal or near instant reversal. Now obviously that doesn't happen every time. Not every kind of FTB setup is purely order flow based. You don't always have that order flow occurring. We go back to the fact that obviously we are trading at a supply and demand zone, even in isolation or within a support resistance zone, and we are obviously banking on that holding or selling the highest chance of holding on the first return as well. So we combine those both those reasonings to give us the predictable price action that occurs on the first time back. But the important thing is we should not be scared if we see price moving with good momentum when we get close to into area. It's something we expect to see, and it's good price action that confirms the order flow that is occurring, i.e. that we expect to be occurring. That's important because people without confidence in trading generally get scared to go against strong momentum moves and consider it impulsive and therefore pull orders, etc. So it's important to understand why we get the good momentum move in terms of the order flow occurring and therefore the predictable price action we expect, so you don't get scared trading against a strong move via a touch trade. Okay, so that's the reasoning summarized. Next, I'm going to discuss what do I look for in determining or finding and evaluating a suitable FTB setup. Now, obviously, those that watch the videos knows I'm looking at two things. I'm looking at supply and demand zones in isolation and support and resistance zones. So the type of things I'm considering when I'm evaluating a setup is the support resistance zone clear and concise? Okay, and the more time frames the better. What I mean by that is if you have a support resistance zone that is apparent and clear on a daily time frame, H4, H1 and M30 for example, then obviously more people are looking at it. More market participants are looking at the SR. The more people are looking at it, the higher the order flow concentration, because the higher the volume of traders that are making decisions based on that SR. Okay, that's why we want to find clear SRs, because we need other people to be seeing that SR and making trading decisions based on that SR. Okay, concise SR. What I mean by that is I'm not looking for an SR that is. I'll come across examples when I look at the go to the charts, but I'm looking for an SRs which are well defined within. I'm not looking for a massively wide zone. I'm looking to pinpoint exactly where I can find the supply and demand within the SR that led to the breakout, because that's what I'm going to be using as a basis for my entry and stop loss on the return. So I don't want a wide zone. I want something which has well-defined decision points at its edge. Okay. And when it comes to supply and demand zone, I obviously want a fresh zone. Okay. Why we haven't had the first time back yet is something that's called something that's caused a fresh breakout from a zone, from a period of consolidation. And again, just like for the SR, I want it to be clear on the time frame we're trading. I want it to be concise in terms of I want it to have a well-defined edge, decision points, an SR at its edge, because that's what I'm going to be using to find my entry and stop loss. And with a supply and demand zone, I also want it to have substance. And by that, I mean, essentially I need it to be meaty. Okay, I want it to, I'm not looking for a tiny zone on a H1 time frame, because I know that it will stand a lower chance of working out, because it doesn't take much to push through a tiny zone. I want to be looking at a zone and say, yeah, that can reverse price. Okay, I don't want to, for example, on euro dollar, I don't want a 3 pip wide zone, because to move euro dollar 3 pips doesn't take much. It doesn't matter what demand is sitting within that 3 pip, but it's a much lower chance of it holding and reversing price compared to a zone that is, say, 20 pips wide. And the zone that is 20 pips wide is most likely to have multiple decision points, i.e. multiple packets of supply and demand within that zone. Okay. Now, obviously, I'm looking for a clear breakout. We want that strong momentum breakout. Why? Because a strong momentum breakout suggests or tells us we had a strong supply-demand imbalance at the SR or at the supply and demand zone. A strong supply-demand imbalance leads to a strong momentum, high momentum breakout. And then we're looking for the arc-like return in terms of the amount of time it takes for price to come back and the distance traveled. I.e., we're not looking for the immediate retest. There's no kind of hard and fast rule, but it's just visually you have to ask yourself, has price been away long enough? Is there enough distance for that order flow concentration to build up? And if all that's occurring, I then expect price to move with good momentum into my FTB level. And then it's not like an FB and a false breakout, for example, where we're looking for, most of the time we're looking for pretty much instant next 1 to 2 bars rejection. We do expect, if we do get that good rush into it, we don't expect price to consolidate for, if we're trading H1 so that we don't expect a day of consolidation. We are looking for a fairly quick rejection. Most of the setups you'll find you trade on FTBs are, as I said, order flow based, so therefore that does lead to a good momentum move away from our level or zone. But the important thing is not to be scared by momentum moving into when we get close to our area. Okay, moving on to trade management. Trade management is pretty similar to false breakouts on the way I approach it. We're always looking at entry at the first possible area price could find supply and demand, and stops are just always based on logic, being objective, looking where we are likely to be wrong, and for me that's going to be finding the source of the supply and demand that led to the breakout and putting the stop loss below there. Okay, so entries at the first possible decision point where price could find supply and demand, stops beyond a logical decision point, source of this initial supply and demand move. This will become clearer when I look at some examples. But we also have to bear in mind the general volatility of the pair too, because the way I find stop losses is by zooming in. So if I have a H1 base setup, I'm going to be zooming into M5, M1, M15, depending on the pair, to really pinpoint those decision points and that source of supply and demand that led to the breakout. And my stop loss is going to be placed beyond one of those decision points. Now, you also have to bear in mind volatility. So if I have a H1 base trade on, say, a yen pair, and I have a tiny, so for example, a rally-based rally zone leading to the breakout of an SR, that's 5 pips wide. Now, logic tells me, and common sense tells me that a 5 pip stop loss on, say, Aussie yen on a H1 time frame is extremely low, and therefore I might look at that and think, actually, I'm going to find another decision point slightly lower down because the volatility on this pair suggests that a 5 pip zone stands at a much lower chance of holding whilst this area still holds, if that makes sense. So price could easily move down to a lower supply decision point, but still and react and still hold and the trade still work out. So I don't want to get too greedy, and you have to bear in mind volatility in that respect too. With supply and demand zones generally, as I'm looking most of the time looking for zones that have a lot of substance, I expect there to be a decision point right at the edge of the zone, i.e. well-defined edge of the zone, and you'll normally find you have multiple decision points within the zone, and then at the bottom of the zone you'll have the initial source, so the source of the supply demand that led to the breakout of the SR. Okay, so you have multiple decision points within that zone. If that is the case, then you don't expect on the balance of probabilities price to hit that source of that supply and demand. You expect it to react to a high decision point, and that can help in terms of stop loss placement. And again, those of you know me well, and I mentioned this last week, I never trade according to win rate, which is a very common retail thing to do. I trade according to expectancy. I'm maximizing my long-term profit. Okay, when you're looking at stop loss placement and entries and even determining setups, you don't want to be looking for the highest probability. I'm only going to trade the highest probability setups. I want to be trading everything that I know if I did it 100 times it will make me money. Okay, that's sort of a mindset. Most people find it hard to do that in terms of the standard retail thing is to be picky, focus on win rate, on those highest probability setups. Okay, I like to focus on expectancy because that leads to higher longer term profit. But that's a subject of another webinar. Okay, moving on. Just like FBs, I'm not really going to discuss trade management in too much detail in terms of running trades and how to look for bigger targets, but an FLI, FLS is just a supply-demand support resistance that could cause price to reverse. Okay, and again, I'll go over it with examples, but it's pretty much the same as what I went through with the false breakouts. Okay. Obviously, we have to consider the strength of the setup. If we've got a setup that is clear on if it's a daily SR, for example, and we trade on H1, then it makes sense to consider the daily picture and consider the daily time frame when setting your targets in terms of where price could run to. Okay. Now, I'm not going to discuss this in much detail, and I deliberated a lot whether to. This is the subject I discussed on the third video, and I deliberated a lot whether to actually mention this at all because, as I mentioned on that video, I find people use these kind of considerations in too much detail and use them as reasons not to take a trade, because most people generally trade without 100% confidence. But there are other things that it makes sense to consider when analysing a setup. But the important thing is to remember that FTBs have a positive expectancy if trading on a set and forget basis, i.e. ignoring everything else, but there are times where you consider other things which can help in evaluating the setup, i.e. help minimize losers, etc., and things like that. But it's important not to go overboard and use them in the right way, and not, as I've seen many a time, people use them to talk themselves out of setups which are actually good setups because they don't have the confidence and they don't really understand how to use these in the right way. Especially when we see, price moving fast into the FTB area, generally that makes people scared. And if you haven't got 100% confidence, you are going to get scared and talk yourself out of setup if you have a reason to. Okay, so I'll just run through these. Trading right before news, I mean, that's pretty common sense. If you've got an FTB set that's just about to trigger right before major news events, it's going to stand a lower chance of working out. Why? Because you're going to have increased spreads depending on your broker, whether you've got a market maker or ECN, but you're going to get whipsaws, especially if it's, like for example, anyone that saw the CAD movement after the CAD rate statement and today. You can get moves like that. Now, I don't care if there's an FTB set up 10 pips away from price, you have to remember that supply and demand is dynamic and not static, and what happens around major news events, people pull orders. Generally, news moves are based on low liquidity because there's a lack of orders in the market, because people pull, just like I do, people pull their orders before major news events because they don't want to get involved in the whipsaws, etc. Okay, so if you have an FTB order 10 pips away from a major news event, the likelihood is you're going to suffer a loss in it, even if it does work out, because you're going to get whipsawed out, and you can get even worse, you can get negative slippage via increased spreads and just the lack of liquidity that leads to slippage. So it's risky to do that. Now, it doesn't mean every news event I'm going to cancel my FTB orders. I actually had 3 FTBs planned for CAD-related pairs. Now, neither of them triggered because CAD went in the opposite direction, but they were far enough away from price that I was happy to leave them in, and I would have reacted at the time depending on how price was moving. But you have to make a judgment call on that. And there was some this week during Asia, during the Japanese monetary policy statement, which triggered. One was a loser, one was a winner. Not that I traded them because I don't trade Asia generally, but you have to make a judgment call on that, but you have to use common sense as well. Impulsive moves, now this is the most common one which people will use for the wrong reason, because we expect price to move with good momentum, but people will generally, if they don't have confidence, will use this and say, oh, it's impulsive. It's impulsive, I'm going to decrease risk or not take the trade. I've seen time and time again people use that as an excuse not to take a trade when they should be aware that we do expect that good momentum, and you can't get scared by going against momentum. But by an impulsive move, what I really mean is price moving into the FTB area with high momentum from a distance in a way that you don't generally see on that pair. You can easily look at the surrounding price action and see, is that movement out of character for that pair? Price basing just before the FTB area. One that obviously decreases the value in the trade because you've got a new consolidation zone, which could be an FL, FLS, and obviously breaking out of a base line, new SR, involves a breakout, so you're going to get high order flow concentration going against you, which you wouldn't have if that wasn't there. And if that's close enough, that could be enough to overcome the sort of supply and demand sitting within your zone. Washing out SR zones, don't come across this too often to be honest, but an SR zone that's acted as support and resistance via flip zone multiple times in quick succession suggests that it's losing its ability to be an SR, and price isn't going to respect it very soon. One of the most annoying ones which occurs is price missing your entry by 1-2 pips. Now again, this one's a bit more subjective. There's no hard and fast rule. If it misses by 2 pips, you cancel. You have to just look at the setup and ask yourself, is it likely that price has hit the orders that you wanted to be a part of? You can zoom in, find why price did react where it did. Is there a 1 minute decision point just above your zone? Look at it objectively and just ask yourself, how has price moved away from that? If it's moved away from the strong momentum 1 pip away from your zone, you can pretty much, and gone to your FLR, FLS, you can pretty much conclude that that's reacted in the way you wanted your FTB to react, and it's 1 pip away. It's likely picked up the orders that you want to be a part of. Therefore, the FTB setup is not the same setup it was before, so either reduce risk or cancel your trade. Sometimes it comes back and works, sometimes it doesn't. There's no kind of right or wrong way, but you just have to consider it objectively, and obviously everyone has different risk tolerance in terms of what they would do in that situation, but it's something you need to bear in mind at times. I've pretty much just been over this by talking about those other considerations. With FTBs, I find if people have a lack of confidence, they find a reason. They either find a reason to not take a trade, the typical one being they consider it too impulsive if price moves with momentum. The other one is micromanaging, which everyone's guilty of. I'm guilty of at times as well. You zoom in, you want a H1, you zoom in 5 minutes, you don't like the way price is moving, you cut the trade. I mean, I don't generally do it quite like that, but that's generally one of the mistakes people will make, and that comes from lack of confidence. You've got to let a trade play out, and you've got to have confidence in your trade rather than your trade triggers and you're instantly looking for a reason to exit. That's not the mindset to have when you're trading. If anything, you should be having the opposite mindset. If price moves in your direction, you should be looking for a reason to move your TP higher and add to your entry, not it's in play quick, it's moving my direction, when do I cut it, when do I cut it, oh, it's pausing, what do I do? You've got to have confidence in anything you do in trading, whatever you're trading. And if you can't watch a trade play out or let it play out how it should, then you're going to have problems. And that comes with the lack of confidence. And again, just like false breakouts, I mean, I am a momentum-based trader, so therefore I am looking for those quick rejections, but I'm not going to color trade if it doesn't reject a H1 setup in 5 minutes or even on the next bar. Now, I'm not going to let it go on for another 8 hours consolidating going sideways. It's clear that's not the price action we expect. I'm going to consider cutting it or reducing my exposure if it doesn't do anything for a period of time. But it's not quite like false breakouts where you expect that instant reversal all the time. And you have to consider what you're trading. So if you're trading a 5 minute zone, then you don't expect the price to hang around. Because the 5 minute zone doesn't have as much substance as a H4 zone, for example, which could be more of a positional zone. Lastly, what do I trade and why? I pretty much will trade any pair. I don't, obviously, I don't have time to learn. There's a finite number of pairs anyone's going to look at. I trade the main indices, dollar, yen majors, and the main cross pairs. I used to look at exotics, but I just found that the number of setups were too far and few between to make it worthwhile or efficient use of my time looking each night for setups. But any pair that is liquid enough, these will work. Okay, but you do have to consider liquidity. And what I generally find myself is the less liquid the pair, the more picky I get in terms of the setups I want to trade. And the same with timeframes. The lower the time frame I go, the more picky I am in terms of looking at the substance of the zone, for example, because obviously a 5 minute zone is not going to have as much substance, whatever it looks like, compared to a H4 zone. So I do get pickier, inherently get pickier as I move down the time frames and as I move towards the less liquid pairs. So I do generally find less setups on, for example, Aussie New Zealand dollar, and some pairs just aren't. Some pairs are very what's the word, like not erratic, but very volatile in terms of if you're looking for a concise zone on some pairs like Aussie New Zealand dollar, it doesn't move very smoothly, so you're not you're not going to get those really concise zones that you will get, for example, on a dollar major, because those pairs have a lower liquidity, and therefore you get those like ragged movements, if that makes sense. You also have to consider value in a trade, so you have to consider your spread as a cost to trade, and depending on what broker you use. I mean, obviously I use mostly ECN type brokers, so I do look for lower spreads so I can. I'm not using one of the old-fashioned spread bettors which have like 15 pip spreads for some of the crosses, which obviously isn't conducive to trading FTBs. In terms of trading sessions, now obviously I trade New York and London. I'm not active during an Asia system, but FTBs do work during Asia as well. Now, I don't generally, I have started to recently leave setups overnight because I don't like leaving trades unattended. You never know what quite could happen. But there's no reason why, if I was awake, wouldn't trade an FTB during Asia. Between sessions isn't, especially between like the New York and Asia session, isn't the most ideal time because you have a lot of low liquidity during that time, and you can get some erratic price movements, and obviously a lack of liquidity isn't what you want when trading a liquidity-based order flow-based setup. So I'd be more cautious at setup triggering during those 2-3 dead hours between New York close and Asia open. Other times I don't trade. I definitely don't trade Sunday open. Low liquidity, definitely between Sunday open and London open. I certainly noticed setups not working out as well during that period. And it makes sense because it's the lowest liquidity time of the week relative to that same time period during other days. Obviously late on Friday, no one's really trading after European close that much on a Friday. Again, low liquidity. That's all you've got to bear in mind is liquidity, because liquidity leads to order flow, and you need that for an FTB setup to most likely work out. Okay, so now I'm going to switch to some charts. Just bear with me a moment. Okay, hopefully with a bit of luck you can all see a blank MT4 profile. Okay, so I'm going to talk through 10 examples. 5 of them are SR based and 5 of them are SD based. Okay, and just look at how I would analyze the setup and how I would find my entry and stop loss. So silver 15 minutes, just looking at this straight away, it just stands out. You've got a very well defined edge to this zone, a meaty zone, IA zone with substance, and you can see the very strong momentum breakout. If you just look at the price action to the left, you can see this whole area just completely stands out. So this is a 15-minute zone, so what I'm going to do is zoom in. There's no point zooming in on M1 on silver because it's just look at that's just not useful at all. So M5 is the lowest you're going to go. So the first point I'm looking to find the decision point that marks the edge of the zone, because that's where my entry is going to be based around. Then I'm going to look in to see if I can find any decision points within the zone and the source of the demand that led to the actual breakout. Now, this one's pretty much a picture perfect zone in terms of you've got the breakout, you've got the immediate retest, and then price shoots away with very strong momentum, doesn't even pause that much, just shoots away. Now, that immediate retest is a good sign because it confirms exactly where the decision point is that marks the edge of the zone, because price broke out, it came back, it found demand at this area, and that marks the decision point, the edge of the zone, and that confirms marks up with the previous edges up here as well. So that's a very clear edge, as clear as you're going to get for zones. So my entry is going to be at that level. I normally use a buffer, so I'd use a 1 pip buffer on here plus spread, obviously. Now, looking in the zone itself, I can't look at M1. There's nothing within the zone. There's no decision points. You could maybe argue that that's the source of the demand that led to the breakout, and then this is the overall source that started the whole move. But for an M15 zone, I'm going to be more cautious than a H4 zone, because obviously there is less substance in an M15 zone, and aside from that, metals can be quite volatile. So, and this doesn't stand out enough to me for me to want to put my stop loss just below here. So my stop loss is just going to go below that zone. There's no logic in place it any lower. It breaks here, it's most likely to move down because it's consumed all the demand that led to this breakout. So my stop loss is going to go, again, I'll use a slight buffer, so it's at 11, so I'll put it at 10s, entry at 23s plus spread. And obviously there's a clear target on this one as well. We had the breakout of this area here, and we have the supply up here, so that's one big supply zone. And I would target the edge, just like I'd target the edge, use the edge here to place my entry. I'd use this edge to have my FLR up here. And you can see we have the strong momentum move down, and this is what we expect because we've got a breakout of this SR. So we have the breakout, that's a breakout rush. We know there's a liquidity vacuum there of sorts within here because prices move straight up through it. There's no supply demand packets within here because there's been no time for it to form. We've got the breakout rush from this higher SR, so we expect a strong momentum move down. You shouldn't be scared by that because it's exactly what you expect. And you can see we have that typical FTB-like order flow, not the instant rejection, but we don't have a, it reacts pretty much to the edge, and it's reversed in the same manner that it came down. That's pretty much a textbook picture perfect trade. Obviously, they don't always look like that or work like that, unfortunately. Euro New Zealand dollar M30. I'm deliberately using different time frames and different pairs so you can get a flavour of the types of setups I find on different pairs. Again, now this isn't, I will find more zones that have more substance than this, but on this time frame, if you look at this pair, you can see it's very choppy. It's one of those less liquid pairs, therefore it's not as smooth. Therefore, if you wait until you find the most smoothest zone with a massive substance, you won't take any trades. And that's where backtesting over different pairs, you find different characteristics, different setups that work on those particular pairs. And you've got to weigh up the setup as a whole. I look at this and say, there's no way I don't expect price to react here because look at the strength of this breakout. And again, if you compare preceding price action, this breakout stands out. There's no other breakouts even come even close to looking like that. So I expect the source of this move to hold on the retest. We have a nice arc in terms of the space. So again, M30, I'll look down to M5. M1's not going to be any help. I don't think I look at M1 this far back anyway, but you can see it's, again, not very liquid on this pair, so there's not much information to look at really. Again, you can see the zone edge is very well defined. Some entry is going to be placed on that, plus buffer plus spread. We've got these 2 points here. Now, again, this is a zone that I know doesn't have as much substance as it could have, so I'm not going to be fussed about having a, whatever that is, 3-4 pips better stop loss for the sake of it. It's going to go below here. It's 1 pip or 2 pips below here, a little buffer, rather than below here. Splitting hairs, 3-4 pips there. You might as well have it slightly below. And this is one I actually remember. I remember it why, because Aranda widened their spreads around this time, so I missed this trade. Well, I think everyone else in my trading room managed to get it. Now, you can argue that, and this supply within here is the FLR, but if you have some price action knowledge in terms of compression, you'd notice that this area all up here is fully compressed. So if price gets above here, it's going to easily move above here up to the supply zone within here. That's not something I'm going to discuss today, but that's compression. And once you see the strong momentum move up there, it would be logical to run half the trade above here, because if price gets above here, it's going to easily shoot above up to the next untested supply. And you can see in terms of the price action how price moved into it. Zoom in a bit. You can see as price gets close, we have that stronger momentum move. Again, we need a strong momentum move, and again, it was reversed in the same manner that it moved down. As I said, you'll see some examples, it doesn't always happen like that, but that's a standard FTB price action. Why do I use buffers? That's a good example here. It would have missed it if you'd waited for it to hit the actual level. But orders aren't always, orders are obviously split and they are clustered. They aren't put at an exact price level in terms of, if we think back to the order flow concentration we know occurring here, it's not going to be exactly at one price level. It's going to be around the edge of the zone. Hence why I use a buffer. Well, that doesn't stop me missing some trades still, but it certainly stops me missing a lot more. Now, this one, you can see this is one of the ones that is nowhere near as nice in a way. Again, if I look at this, this is a nicer zone than Euro New Zealand dollar in terms of substance, and it's obviously a more liquid pair. We've got an extremely clear edge to the zone on this time frame. That's what I mean by concise SR, looking like that. So now I want to zoom in. I mean, on this time frame, you can see this is going to be an area of interest. Like this looks like the immediate source that led to the breakout, and this looks like the source of the overall move. And that's what I'm using different time frames for, to find information. People generally have this perception that high time, sticking to one time frame or high time frames rule, but really time frames just display different information. A lower time frame displays something you can't see in a higher time frame, because you'll see, for example, just a straight bar, a bullish bar, but within that you'll find pockets of supply and demand within that bar when you zoom in. And likewise, a lower time frame will show you more noise, or it won't show you the overall picture, where a higher time frame you'll be able to see the bigger picture. So the way to use time frames is to look around time frames, and MT4 is very limited in terms of the time frames you can look at, but you use time frames to find additional information not present on the time frame you're looking at. So if I zoom into M5, and we can see this area is definitely what led to the move higher, and then this is the initial source. Now, this does occur. It's always a bit, always look at this and think, oh, great. It's not an easy one, because you've got this clear zone edge, but you've got price breakout, it came back, demand in there, it broke out again, came back, we tested this, flip this area here, and that's where the high momentum started. So where do we place our entry? It's not, ideally it would be simple in terms of we had a test of this area, then a straight breakout like some of the other examples, but we do get scenarios like this, so it's important to go over them. There's not a right or wrong answer. I know people do it in different ways, but what I would consider is price could react obviously at the zone edge. It could react, or it could react at the start of this move, or obviously there's a decision point, a little mini SR in terms of this is one rally-based rally zone, isn't it? So price could react back here. So the 3 potential points where price could react. Now, you don't want to be getting too silly where you're starting to place your order so high that it's so far beyond the area. Now, what I would do generally is ignore that one, but place my order at this one, depending on the situation and the price action and how far that is away from this area. And my stop loss would either be below here, below here. Now, from an expectancy perspective, I would expect this whole area to hold. On the balance of probabilities, price will react in that area and move away. Now, there is going to be obviously the odd occasion where it comes down here and does move away, and that works out. And that's obviously not easy when that occurs. It's frustrating, but that's when thinking in terms of expectancy comes into play, i.e., if I did this 100 times, I had my stop loss down in this area, what would my net profit be compared to if I had my stop loss in there? Thinking in terms of what makes you the more profitable in the long term rather than what gives you a higher win rate. Okay. And obviously the other thing I'd be bearing in mind would be volatility. So I would zoom back up and I'll say, if this, for example, was up there, entry was up here, that would be too low for a yen pair. I'd be like, that just doesn't make sense. So below there, from an expectancy perspective, that's where your stop loss should go. There's nothing wrong essentially with putting it down there. There is putting it down here or below there, obviously, but that's the wise it can be. And also when you're not fully confident, you are going to be more inclined to put it down there, below there. Now, FLR. Now, it's always hard to be objective after the event when you know what's happening, but I'm going to try and be. Now, looking at it quickly, you'd say, well, shortly up here, which it does do, but not before actually probably, depending on how much buffer you use, either taking your stop loss below there, but definitely also taking it below the first one. And obviously this price action is not, you've seen the previous examples, this is not how the typical price FTB trade occurs. And there's no way, personally, I would be holding this trade until it hit up there, even if it didn't hit my stop loss. There's no way this is the price action I'm looking for. I am a momentum trader. I am looking for that, not instant rejection. I will give it a while if it doesn't reject instantly, because I know it doesn't necessarily mean it's not going to work out, but it going this long generally tells me the price action I'm looking for and the order flow concentration I'm looking for to occur isn't occurring. Therefore, it's not the setup my trade was based on. So I'm going to reduce my exposure or cut my trade. Now, it does work out, well, it's a bit iffy, but you can say it works out. But another way to look at it is Okay, this is a high momentum move down. Is that impulsive? I would argue no. I know some people will look at that and say, oh, it's moving too fast. And obviously it's harder it occurring at the time and you seeing it in real time, price moving that fast. It's easy to look back after the event, but this is the sort of analysis I'd be looking at. You always have to ask, is price moving fast and do you expect it to be moving fast? And as I said, if you've got a breakout, then also you expect it to be moving with high momentum, and if it's getting close to the FTB area, we expect to move with good momentum as well. Now the breakout is obviously below this kind of area. We have demand here, and if you look back, you see this demand, supply, supply, demand. This is an SD zone or an SR zone flip. You can see we form a drop-based drop there, and then we have the good momentum down here. But is this move either the fast move from a distance, does that suggest it's an impulsive move? Now, you could argue yes, but I would argue no, because again, it's a breakout below this low. And if you look at the price action over here, that is compression again. So there's nothing to suggest that this shouldn't move with good momentum. I would look at that, and again, it comes down to understanding price action and how price should move and why. I expect price to move from there to there with good momentum, and then I expect it to move on a breakout this area with good momentum. So that, for me, isn't an impulsive move. But I know a lot of people who would look at that and they wouldn't take a trade based on it. Now, as I said, at first glance, your FLR could be up there, and you can still argue it is. I'm not going to say it's not, but you can see there is a flip along here, and indeed, price created a new supply zone just below it. We had to break out, had to retest, and then price went again. That creates a drop-based drop, and it's that what price hits after the initial. You see, we have the initial move and that quick rejection. That is the FTB playing out. I'm not going to say it's right or wrong to have an FLR there or there. It depends how you look at things. It depends what type of trader you are. I mean, I am a momentum trader, so I'm not looking for big R on most of my trades unless I have a very good reason to run it, like that New Zealand compression I mentioned earlier. So I wouldn't necessarily be looking up here, but I'm not going to say that in retrospect. I wouldn't have taken a loss on that, but I certainly wouldn't have let price do that. If once it got rejected back down from there, if I was still in it, once it started coming out down there, I would be looking to reduce my exposure, because we've had one test, a deeper test, and then what's the logical thing to expect now? Another deeper test, and obviously my stop loss is down here. It's going to be here. You know, that comes back to the number of times the supply and demand is hit, the weaker it gets. You see that in action here. 3 touches, and each test is a lower test. So once we've had 2 tests here, and it starts coming back, it's small probability that it's going to come and make a new lower low, which is going to be below my stop loss. So that's when I'd be looking to cut it, reduce exposure. Euro dollar 15 minute. Now this is one you'd say, well, surely this doesn't have substance because it's like three bars wide. Yes, definitely. It's not like that. It's not even as good as that, and it's definitely not as good as that. But that's when knowing your pair, for example, obviously this is a very liquid pair, and considering the setup as a whole. Now I look at this and say that whole area stands out. If you look at preceding price action, very strong buy in here, we basically create a rally-based rally, and then obviously the strong breakout. That stands out compared to all this price action down here. Here we have a strong move there, but there's no clear zone there like there is there. I mean, this is a very concise zone. It doesn't have a lot of substance, but the other thing going for it is obviously there was an SR along here as well, and it's a very clear SR. So considering all those points, I would say yes, this is tradable. Okay, so if I zoom in to M1, I probably can't go back that far. Let me try M5. Should be enough. Yeah, and like a zone, it doesn't have much substance. It's going to be pretty black and white in terms of zone edge source of demand. You're not going to get any multiple decision points, and even if you did, there's no way on an M5, M15 base setup, which is what, 20 pips, or even that, 10 pips wide, I'm going to be looking to place my stop loss, within there. It's going to be below that zone entry. It's going to be above the high. And on this time frame, you have along there, and then also you have new supply created, just like for the pound yen, you have a new drop base drop there. So, you know, it's obviously we're looking at low pips here, but it's still nearly 1R result, and it does what you expect it to do. Aussie CAD 1 hour, similar, very similar setup. This is the last supply demand zone one, but you can see they all look the same in terms of strong momentum move, zone with a clear edge. Some zones have more substance than others, but you have to consider the bigger picture. This one has SR history along here as well, in terms of we had demand there, we've had a flip along here. It's respected this area very well within here. And then obviously we've had a zone and a very strong breakout, which again stands out relative to all the preceding price action. When I scan my charts, the first thing I'm pretty much looking for is areas of strong breakouts. Then I go and find the supply and demand zone that caused it and see if I can find a zone that fits with what I'm looking for in terms of that checklist. So if this is 1 hour, so if I zoom into 5 minutes, can't really go any lower than this. Now, again, this one's pretty straightforward. You've got the edge. We've got a very clear source here. And obviously, the initial source is below there. Now, this is one where I look at this edge, and you can look at that and you think, well, there isn't actually much up here. Now, I'm not going to put my entry down here because I still want to put it the first possible place price could find demand. But there's not multiple touches to confirm the edge of this zone. So it's quite feasible to expect it to come and hit that source because there's not much in the way. There's not much in the way along here, is there, compared to what you've seen in other zones. But I still want to place my orders at the first possible place, which is this high here. But I definitely wouldn't be surprised to see that. So my stop loss is definitely going to go below here, below there, and obviously the trade is invalidated. And as you can see, if I draw a trend line thing across, you can see where does price hit. Eventually it hits down there before moving away. But initially it would have hit my orders at the edge. But it's no surprise to see that source, which is very clear when you zoomed in, actually causing the bigger move. But I'm about the initial momentum move. And again, the FLR is a bit tricky in terms of you could easily say it's above there, and that certainly wouldn't be the wrong thing to do. I'm generally a bit more cautious when I get to more exotic pairs because I don't understand the pairs, but you get to know pairs, the nuances of the pairs. So I don't know obviously CAD very well because I don't trade it very often, obviously. So I'm normally more cautious with my TPs on the less liquid pairs. And plus, it's harder to decipher price action because you can see it's very choppy. So, for example, looking for compression, well, all of this stuff looks compressed because it's very choppy in itself. So, but price does hit there. All I know is I wouldn't be taking a full loss. If my TP was up there, I wouldn't be taking a full loss once it came that close. But again, it's a bit hard to be objective. You know, you can see why price reacted up to this area, but it's nothing wrong with expecting it to move up to there, which it does eventually. Depends whether you're more of a position trader in terms of holding, expecting the whole zone to, the zone to hold and a bigger move to occur, or whether you're just a momentum trader looking for the initial rejection. Okay, onto SRs. This is kind of my favorite combination away when you have an SR, and you see this is a clear SR, but it's also a very clear drop-based drop as well. A clear SD zone on the time frame you're trading within yes and an SR zone is obviously very good confluence, having both of them at the same time. So going to do the same thing. Going to try and shoot through these a bit quicker now. Might be a bit repetitive for some people. Again, you can see zone edge or SR edge, immediate retest confirms the edge of this SR. That's where my entry is going to be placed upon. There's nothing really within here, decision point wise, that below the source. So my stop loss is going to place above that high. I mean, there's nothing within here to look for a tight stop loss, and obviously this isn't a particularly large stop loss in any case from a volatility perspective on a yen pair. That's going to be the FLR, FLS. Again, it's pretty compressed below here as well in terms of looking for a bigger move. If you're looking for a second target, that clearly would be it because that's untested demand within there. Euro Swiss franc, again, a clear SR, strong momentum breakout. Now this is a good example because you can see, I'll zoom in a minute, but you can see there's no test here before the breakout. So what we're ideally looking for is something like the Euro Yen one, where you have a clear SD zone on the time frame the SR is apparent, which isn't the case in this example. Lost where it was. Okay, there it is. So small, can't see it. Okay, 1st of November. And you can see if we go to M5 again, there's no pause here. There's no immediate retest. There's nothing to confirm this as the edge of the SR, which is not ideal in terms of it would be much more easier to be confident about this if there was either like the Euro Yen one or even on a lower time frame some sort of RBR here before the breakout or immediate retest after the breakout, but there's nothing, just go straight up. So that makes it harder in terms, doesn't make it hard in terms of entry because we have a very clear SR edge. So that's where obviously our entry is going to be based, but it makes it hard in terms of stop loss because a stop loss below here for me would be quite wide. I mean, this is dollar Swiss franc, which isn't a volatile pair. Pit movement's relatively low. So a stop below there would be relatively wide. And obviously if you had a stop below there, unless you were looking for a bigger move, you couldn't, I mean, I wouldn't ignore any of these areas in terms of looking, when I'd be looking for the retracement back up. These are all forward demand, turn supply areas. There's not a lot of space here. So a stop loss below there certainly wouldn't create value for me. But what I would be looking at would be, we have obviously former supply within here, which is ignored on the way up, which suggests it should act as demand on the way down. And that would be the basis of my stop loss. I'll be using a little bit of a generous buffer because that is obviously quite tight. But there's nothing else you can maybe look at along there. So either below there or below there. They're the two major decision points within this area, apart from below the area. But that for me is too wide for this pair. I don't expect price to. The thing with placing stop loss below there is price stands a good chance of doing that. The further your stop loss is below the area, the higher the chance it stands of forming demand, supply or resistance on the retrace. Because what you're essentially looking for in the FTB is it to do that essentially, or a little consolidation, but you're not looking for an extended move down so far down that this now stands a good chance of being resistance on the retrace, and that stop loss below there means that this does have a high chance, like what it does. If you look at this here, when it comes down to there and it breaches that area, what does it do? It does that. The wider your stop loss, the higher the chance of that occurring. And obviously the wider your stop loss, the lower your reward, and the more removed you are from actually trading the SR. If I'm trading down there, I'm not really trading this SR, am I? It's so far removed from the SR that I wouldn't be able to objectively say that the reaction has occurred at the SR. If it's occurred down there, then it's the demand down there. Then it's not really, I've got my entry wrong essentially, and I've misinterpreted the situation. So either below there or below that area along there, and then obviously I'll be looking at these areas and looking at the most recent price action, which is this area along here, which kind of, you see the price reacted, it came down, came close, then came up, met supply up here. So that's the first supply area within the path. And again, you needed a buffer to get in on that. Pound Swiss franc. Again, we've got an SR. It could be clearer. I've seen clearer SRs than that. But what I like is, again, I'm not going to just, I would look at that and say, could be better. I'm not in love with it kind of thing. But that's where you have to look around other time frames to find information. If I go to M15, nothing really there. It's got demand that came in there and it broke out. There's nothing really here at the moment. We've got those area there, but it's not the strongest SR you're ever going to see. So I want to, then I look at M5, and that is lovely. That's a brilliant DBD, drop-based drop before the breakout. That confirms to me that's the same as having another touch on a higher time frame for me. So I look at that area now and say, yes, that's a good area. That's a great supply-demand imbalance out of that area. That's clearly a source of supply that should hold on the retest, or this whole source of supply starting from up here. And we've got the previous decision points along there. So now this is actually a much nicer setup. All because I've seen something on M5. So my entry is also going to be below there. My stop loss is going to be, pound Swiss franc can be quite volatile. But this, I'd be surprised if price went above this area. I might lose a little bit of a buffer. Just to, pound Swiss franc is volatile, so it can overshoot at times. And obviously that we have a source of supply up here as well, so it could still hit this area within here, which is still within this start of this whole move. But really, you're looking at this area to hold, which it does just by the looks of it. That's the top of the DBD, yeah. And then obviously I'll be using the higher time frame back to the M30 to find FLS, and this one's a nice one because there's not much within here. I'd look at that area, and you can see there's some wicks within here. So wicks on this time frame will be supply and demand on the lower time frame. So I'd be looking at it and say, well, I want to investigate that. This is the more obvious one down here, but I'd not ignore that because it's not clear. I'd look at a surrounding time frame. I'm going to go to M1 because M1 is always going to show you supply and demand, and to bear in mind M1 demand versus M3, the time frame you're trading. If I look at that and you can see clearly there was something that occurred within here. Price found demand from these lows, and then it broke up. This area is not clear enough. It's a minor on these higher time frames. So this is an area I would be cautious of, and you see this is the area price hit. Traced a bit before coming down. Depends, again, there's no right or wrong way to determine your FLS. I'm a conservative trader with targets unless I have good reason not to be. Okay, two more. Swiss franc yen, M30. Again, just like some of the others, we have some SR history here where it's an SR, but this stands out as well, this DBD. Clearly, I expect that to hold. My stop loss is going to go above there. I don't really need to zoom in too much on this. It's not going to go any tighter than that because of the volatility of this pair. So I'll be looking for my stop loss above there, entry below there. And this one, price comes close. That's not close enough to not want to take my order. And obviously, I am trading away from an area I expect to have a strong rejection from. So I'm not going to say, well, there's no value in the trade because I'm going to be targeting here. This is not big supply. If this was strong supply, then price would have done that rather than just that. The rejection from this area was extremely small, so it wasn't strong supply. So I'm not going to ignore this in terms of my FLS. Where's the first untested support, which is supply demand, when it's obviously down here. You see demand within there, which was support supply within here, and then obviously you've got the bigger demand below there. But this is the first untested demand. Lastly, last but not least, this is a recent one, dollar yen M30. Again, lots of SR history here. It's not overly concise there, but it's more the fact it's acted as resistance here. And what I'm looking for here is to pinpoint in for it to be more concise in the recent price action. And you see these two points here suggest it is. Now if I zoom in on this one, because there's something I needed to mention on this one. Find the right day, get the right direction. You can see how clear these points are. Now, in terms of entry, that's pretty simple. It's just going to be above this area plus the buffer plus spread. But in terms of stop loss placement, you've obviously got the source, the most recent source of the breakout, i.e. here, after confirming as the decision point at the edge. But this is one where, well, that's what, 5-6 pips, dollar yen. I did trade this and I didn't put my stop loss below here. I can't remember exactly where it was, whether it was below here or here. But for me, and it did hold but for me, I would look at that and say, there's too much of a risk for me for price going down a bit lower and then up. And I don't want to be in a situation where price does that and I miss out on a trade just from having like a 2-3 pips tied to stop loss and seeking a little bit more. Now, also, there's a fine line with that. I don't want to have my stop loss down here because you could say the same thing all the way down, but that's where thinking logically comes into play. But for me, there was too much of a risk of that just being too small given the volatility of this pair. And dollar yen, the yens have been volatile at the start of this year. So if I look in, you'd be looking at, there's obviously a decision point in terms of an SR along there. And obviously, lastly, you've got the source along here. I think mine went below this area because you've got demand within here. But tighter stop losses generally comes with confidence. Because when you start trading a strategy that you're not used to using tight stop losses, you're not going to be confident and you're going to be nervous about using tight stop losses. That's where your back testing comes in, because that gives you confidence, doing your own due diligence. So, most people start with would have a stop loss below there, which is you can't have a stop loss lower than that. It's completely illogical to have a wider stop loss than that. Now, I think mine was around this demand within here. I can't remember exactly, but it wasn't. Remember, it wasn't below there, but it did. If I put an SR, I put a line back there. I'm pretty sure it did hold that just. Yeah, you can see it reacted. And you can see this was going to be my FLS's clear supply within here. See on the higher time frame, that was, and again, we had the quick momentum move in. And there's no reason not to expect that quick momentum because there's nothing to the left, and this is a breakout of this new supply zone. So you expect a quick momentum move, and again, not instantly, but we don't expect necessarily instantly. But it doesn't do that. Okay, it gets rejected in much the same way it came down. And hopefully that's enough examples. Cover different pairs, different time frames, certain nuances of finding entries and stop losses. And then, well, if you've got any questions, I'll be happy to answer them. You mean how long do I consider an FTB valid after the breakout before dismissing it as being too far in the past? I think everyone's slightly different in that regard, because I know some people in my training room are different to me in terms of, I prefer things to be fresh. I don't like having to scroll back. For example, I haven't got an example, but if I go to current price on dollar yen, I wouldn't be looking for setup back here. That's too far in the past for me. I don't believe traders have long-term memories, and I don't believe supply and demand, orders situated, and then the order flow reasoning behind it makes sense the longer you look back. I prefer, ones like this. It's relatively fresh. You can see it on your own page. Everyone can see the SR. It's not looking back 3-4 months in the past. I prefer them occurring on my screen. Essentially, that's what I use as a guide. But some people don't mind looking back far in the past, but I generally don't like to do that. I prefer them to be the fresher the better for me. No, trends not. I'm a short-term trader, so mostly around M30, H1, M15. You can see a variety of from M5 up to M30 at the moment. Most of my trades are slightly lower time frames because volatility generally is very low at the moment. So no, I don't consider the trend to an extent. Now, obviously, there was an example last year where obviously dollar yen and all the yens were trending very strongly upwards, and that's something I had to take into consideration because attempting a short against a yen pair wasn't working out. And I had a couple of losses on it, and then had to bear that in mind going forward because there was so much strength behind the dollar yen pair and yen pairs generally that it didn't make sense to look for short setups. Now, trend might play in consideration in terms of trade management. that I am much more of a short-term trader, so I don't generally try to run trades that much myself. I'm looking for that momentum, and then I'm looking to get out unless I have a good reason not to. But I'm an intraday trader, so I'm not looking to hold for days on end. But no, generally, trend doesn't really play a part in whether I take a setup or not. Yeah, I trade any supply demand zone, whether it's a rally-based rally, DBD or DBR or what's the other one? Rally RBD. Doesn't matter. Supply demand zone is a supply and demand zone. Different names for different types, but they're all the same essentially in terms of what's occurring. I'll come back to the FB one in a minute. Key to the universe. I'm not sure about the key to the universe. Yeah, I mean, the ideal way of using a lower time frame is to find a discount into a higher time frame setup on the lower time frame with a higher time frame target. That's obviously the best way of using lower time frames, because then you've got the high R, but using discounted entries, and that's where the daily retest strategy, which I know I haven't completed videos on that yet, comes into play, because that's all about using the same supply and demand concepts and finding the source of the breakout. You can pretty much guess how entries and stop losses are established on a daily retest. You've got daily SR, which is broken. You're looking for that immediate retest. What am I going to do? I'm going to zoom in, find the source of demand that led to that breakout on a lower time frame, use a very tight stop loss based on that lower time frame with a higher time frame target, and get better. Right, it's not as simple as that, because you go from daily to M5, so you've got to bear in mind some nuances. But yeah, that is it. So, I mean, I'm not very good at holding trades, so you have to trade according to your personality. So that's why I'm an intraday trader, and that's why I look for momentum. So it's up to people to take the same concepts and use them to suit their own kind of personality in the way they trade. But the concepts is what's in the important point, and looking how you expect price to move. Now, I do run some trades, but it's just I need a good reason to run a trade rather than being because the trend's up, for example. Why don't we look for FBs of SD zones rather than SRs? Because people don't look for supply and demand zones. If you take the typical trader where they place their stops, they don't go, I place it beyond the supply and demand zone, do they? They place it beyond an SR or swing high, swing low, or round numbers, things like that. You won't find many novice traders saying, yeah, I place my stop because that's a supply and demand zone there. Because most novices don't even consider supply and demand. Most people think supply and demand and support resistance are the same thing. So that's why. And also, if you're trading at supply and demand zone, especially on the FTB, you don't expect it to be broken, so you don't expect a false breakout per se. But they're not the same thing, because people generally don't look for supply and demand zones in the same manner that they look at swing highs, swing lows, and support resistance areas. If you look at books, textbooks and that, you don't find people mentioning a DBD in a textbook. You see swing high, swing lows, you see psychological round numbers, and you see support resistance zones. It's beyond the really. I mean, trade management is really a separate subject. I mean, the way I use trade management is the same regardless of what I'm trading, if that makes sense. The way I make a decision whether to run a trade is no different whether it's a force, essentially, whether it's a force breakout or an FTB. So it's a separate subject, and it requires, the way I explain things in terms of FBs and FTBs is, you probably realise, is explain the concepts, all the videos on supply and demand, then how I use those concepts to trade the strategy. Now, it's the same thing with trade management. There's different price action concepts that I haven't explained. Things like compression, for example. If anyone knows compression, that is something I would use to establish whether to run a trade or not. But things like the stereotypical things like, is the trend up? That's not a reason. That's for me, that's not a logical reason to decide whether to run a trade just because the trend is up, for example. But it's a whole separate topic which is a lot more subjective, and it comes down to you as a trader as well, in terms of your personality, whether you want to hold trades for long periods of time, where you want to see price come back to your entry, having been 1.5 in profit. You know, it's a whole psychological element with trade management as well. Accumulation distribution, not really going to discuss here. It's a separate topic, and no, it's nothing to do with oscillator divergence. Nothing's ever to do with an indicator. Price is never anything to do with an indicator. An indicator is a summation or an average of price. So price, you're not going to look for something because of an indicator. Indicator is roles reversed. An indicator is always result of price action. It's an average of something in the form of squiggly lines in a certain way. But accumulation distribution is price action itself, and it's to do with how big players exit and enter orders. But you know, there's not something, it's too long to go into right now, maybe another time. Yeah, divergence can be a sign of accumulation, but you're better served knowing what accumulation is and how to split with price rather than looking for divergence or an indicator, if that makes sense. Looking at the source of what it is and what it means, and therefore how to spot it rather than looking at an indicator to interpret it. And there is some posts on my Forex thread. If you search accumulation in my Forex thread, there is certainly a 2 or 3 posts that summarize it. No, atomic. Euro. There's quite a few questions. Go back first. Yeah, stop losses below an ST zone at like sell stops, but then you've got, you know, for a supply demand zone to be a place to look for an FB, you ask yourself, why would that supply demand zone? You obviously, you know, if you're looking for an FTB, you don't expect that supply demand zone to be pierced because the order flow that occurs there and the fact that it's institutional supply and demand, and for it to be an area to be looking for a false breakout, it's got to be something that's popular with novice traders, and it's not nowhere near in the same way. And you can say Sam Sidon, but you know, he's not, you know, he's a popular guy on a certain in a certain manner, but you know what, he gets 100 people to his webinars or whatever. You know, it's small fish in a big pond essentially. And you go on any forums, I mentioned supply and demand or search supply and demand, you will find very small threads compared to searching for, you know, round numbers or SRs. It's just nowhere near the same mentality. I.e., any novice trader you ask, where you're putting your stop loss, where you're looking to go breakouts on, it's going to be swing points, it's going to be SRs, it's going to be round numbers and things like that. It's not going to be supply and demand because people don't generally know what supply and demand is. But back to euro dollar. This one. Now this is M5, so this is where I'm going to get slightly pickier. And if the easiest thing to do is compare it to the example above. So M15, one time frame up. This one, it was very clear in M15, this one's not. This one has very clear SR history as well. So straight away you can tell that this one's not as good setup as this one. This one's clear on M15 and it has SR and it stands out a lot more. This one stands out to an extent on M5, but there's no other history here. So, I mean, it's hard to say because it didn't work that I wouldn't trade this, but generally I'm looking for very well-defined zones when I get to M5. I don't trade M5 that often. That wasn't a zone. I haven't got any examples, but and that's when your due diligence comes in and looking at M5 on euro dollar. If you're going to trade M5, for example, quite a lot, then you have to back test it because you have to know what zones tend to work in terms of what to look for in terms of substance on that, because obviously M5 is trickier because it doesn't take so much to breach an M5. You have a bit of news, a rumor coming out, you know, that the Boober head's resigned, you know what happens in that, you know what happened there. So it doesn't take as much to break the substance within an M5 zone, and that's why I'm going to get pickier as I can scroll down the time frames. So I don't think there's a lot wrong with it. It's clearly not as good as this one because this one had SR history and it was clear on M15. This one's only clear on M5 and there's no real resistance history here. The zone edge looks all right, but I'd probably prefer a bit more substance. But I don't trade M5 that often in terms of FTBs. In terms of my average setup is more M30, H1, M15, depending on volatility. And volatility in the market is generally quite low, so it's more around M30. But if you are going to look to trade M5 a lot, then you do definitely need to do your research and your back testing. I generally don't look at M5. I mean, I look at M5 obviously, but only on the more liquid pairs. I'm not going to look at an Aussie New Zealand dollar, for example. You've got to use common sense in that regard. But it's not my mainstay in terms of my bread and butter. FTB setups aren't M5, that's for sure. And I'm going to be more picky for the reasons I said before. Just something I remember in terms of, what do I consider value in terms of R? I'm not looking for 4-5R to an FLR, FLS. You're not going to get that very often. If you're looking to run trades, then yeah, but I'm looking for mostly around 1R. Now, I won't consider anything below 0.5, but most of the time I won't consider anything below like 0.7, 0.8. That's normally my average. My long-term average generally is around 1.2R if trading everything to an FLR, FLS. And also I do look to run some of my trades when I have a price action that tells me it's logical to run part or all of it. But for me, it's more about finding high trade frequency, keeping a good win rate, and an average winning R around 1 to 1.2. Example, and these aren't my trade results, just to make that clear. This is the last 2 weeks, a result of all the sell-ups from my trading room, my charts that I've uploaded in the trading room before the event, trading on a set and forget basis, which is I don't do, and I don't trade, for example, some of them occurred in Asia, and I don't trade at major news events, so I haven't taken all these myself, but these are the results, just to give an idea, of time frames, pairs, trade frequency. You see the average R for these. Okay, this is obviously a very small sample, so it's not a reliable sample, but it's just obviously to give an idea of the last couple of weeks. And this, I would say, is a general standard month, 66% win rate. That's about right for my long-term average, 1.23R, and expectancy per trade of 0.49. So for me, it's more about finding as many setups as I can across a variety of pairs around, you can see there's one M5 there, H1 M30, M15 M30. Volatility is very low at the moment, so that's why normally this would be more H1 biased. But you can see I'm generally looking for about 30 trades a month. Now, obviously, some months are better than others. Like December, you're not going to find nowhere near as many as, say, for example, September. I think I had above. There was absolutely a ton of setups, and my win rate was over 80%. But then November had a poor month, and win rate was more like 60%. So obviously, you have monthly fluctuations, and it depends what the market is doing. You need a trend in pairs that aren't trending too strong. You don't have pullbacks, but you don't want ranging pairs, because obviously a ranging pairs, you're not going to get that strong breakout. So for a given month, I would say on average should be looking at, I mean, that's obviously considering all trading sessions, and I don't trade Asia, and I don't trade all around the major news events and things like that. And obviously you do miss a few things as well. So, but that's just the ones that I've uploaded to the training room on a pure set and forget to the pre-stated FLR, FLS. And you see, the minimum 0.76 up to 2, an average at 1.2. So that's actually quite a good flavour, I feel, for over the long term. No, not really. I mean, I would still trade a news-based base. I get what you're saying, but I've not found there to be any difference. I mean, obviously they don't occur that frequently either, but I've not really noticed any major difference between FTBs from news-based bases, and there's going to be a few on the CAD pairs. I certainly know one. I'm sure I got one to look at. I'm sure I put one on Aussie CAD 15-minute time frame and 20 minute earlier, which is based on today's news move. But I've not noticed it. Now, I've not extensively researched it, but obviously there's not, relative to the number of FTBs I trade, the ones that are generated from news-based moves is going to be percentage-wise low. So you're not going to get a massive sample ever. Obviously, if you backtest it, you have to obviously look at a news calendar backtesting it as well. So I've not noticed it through general trading that there's a difference in terms of reliability. But for FTBs, you should be able to find a lot of sell-ups in a given month. There will be weeks where you don't trade that many because the market's not, it's trending too strongly or it's ranging too strongly. And obviously, all markets are in trade to a certain extent. You obviously got pairs and time frames where you can get diversity and find setups, but some months and weeks are more busier than others and perform better than others. But for me, long term, for me, if I have a 65% win rate or towards 70% and an average winning R of 1.2, and say I don't touch any of my losers and they all go to 1R, which they don't, then that gives a good expectancy. And that for me is the name of the game, finding the maximum expectancy without going a bit silly in terms of looking for a 30% win rate and a 4R winner, because then that affects your confidence. Won't find that to be the case very often, like a supply zone within a high time frame demand. I mean, I would say no, but then I don't really discriminate too much. Like if I see a good setup on M15, it's a good setup, and I expect it to work out. Now, obviously, you've got to be logical about it as well. It's very clear that you've got a very clear supply zone on the daily time frame that hasn't been tested yet. It's hard to envisage where you're going to get that scenario, to be honest, because the opposite ends of the spectrum. So it has to be a very wide daily zone to have a lower time frame set up in the opposite direction. But the way I look for setups is I don't trade a daily time. I don't trade FTBs on daily time frame. But I look at a daily time frame and mark up major daily swing points, major daily supply and demands. There's a major daily SRs. And then I'm starting with H4 and going down. Obviously, less liquid pairs. I stop at H1M30, and I'm just finding clear breakout areas, and I'm looking to see if I can find a clear SR or a clear supply demand zone around it, rather than finding supply and demand zones and looking for breakouts, because you'll be marking up tons and not finding suitable setups. Well, 5% is aggressive, whatever strategy you do. And as you see, I've got a 65% win rate. So that's not the highest win rate you're ever going to find. And if you're risking a lot per trade, win rate can be important because you're going to have material drawdown periods. And if, for example, you're risking 10%, you need a good start. Otherwise, you're going to start, you have 3 losing trades. You can do the maths in terms of the maximum likely period of drawdown in terms of number of trades you're going to have given certain stats. Now, I know I don't risk 5% per trade. I generally risk the same per trade. You can see on here in terms of position size. Now, this is on set and forget, so this is predetermined in terms of quality of the setup. Now, there are things like, for example, New Zealand yen and Aussie yen triggered at the same time this morning, so I don't risk. That's correlated exposure. I'm not going to risk, say, one position size on both pairs. I split it in 2. But this one, for example, was a setup which I liked, but it wasn't quite, it was, I thought, well, it's tradable, but it's not as good as some of the others, so I use higher position size. But most of the time, I'll use the same position size across all FTBs. I have tried varying before, but I just found I didn't, what I consider to be objective considerations to identify a better setup over another didn't work. So I just use, and then you end up trying to overcomplicate it. So I use flat position size. How much do I risk myself? It's normally 2% standard for an FTB. But obviously, I'm not as an aggressive a trade. I'm not aggressively growing an account anymore. Would I grow an account trading purely FTBs? No, I trade a variety of things myself. And if you grow an account, you do have to be pickier to an extent, because if you're risking 10% per trade, you can't afford 5 losing trades, you're down 50%, and you've got to work doubly as hard to grow it back up to scratch again. So I prefer to risk less but trade more frequently, which reduces the pressure per trade and reduces the chance of getting material drawdown, which if you don't get it off to a good start, you're going to get stuffed. Yeah, Kelly criterion, that's it. Oh, slippage is really, in FX, you're kind of like, I don't trade futures really, apart from Boon. So, and it's broker dependent. I get slippage on some of my trades. Is it because I trade maximum, massive size? No, that won't be because the case is. It's going to be the broker and the time. I use FXCM spread betting for one of my accounts where I use that feed to base all my trading decisions on. And yeah, I get slippage with them. Now, I think that's more to do with the broker and their liquidity providers than my trade size. Depends what you're trading. If you're trading a very liquid pair, then also you're going to have to expect some slippage. And if you're trading it between New York and Asia, you're going to get some slippage. You've got to expect it. If you're trading right around news times, you've got to expect slippage. If you're trading with a market maker, you're less likely to experience slippage, but you're more likely to experience requotes or bad fills or not getting filled. Generally trading FX with market makers, you're protected from the not there is a real market, but you're protected from the real liquidity provider quotes and slippage, but you're more likely to get the requotes and delayed fills. I generally don't have that many open trades. I mean, I've obviously been like today. I traded both the New Zealand yen and Aussie yen FTBs. Now, I didn't obviously. That's directly, and that's pure correlated exposure there. So that's half position size each. Now, I generally find I don't have too many FTBs triggering at once. I might be 1, 2, 3 open at one time, but across 15 setups in nearly 2 weeks, you're not going to have many examples of them open at the same time unless they are correlated, and therefore you can preempt correlated exposure and decide yourself. I mean, I just keep it simple and half, so just one position. You can look at the other way and say FTBs work out more often than they don't. It's a good thing having multiple setups occur at the same time, the same type of pairs, but I prefer to keep it simple, especially when you've got to do things quickly. It's not always easy to envisage setups triggering at the same time, so you've got to adjust your orders quickly. So I'll keep it simple and just halve them if they're directly correlated. I don't find many occasions where I've got 3, 4 open at any given time. So I'm looking, what average of 1.5 setups a day on average. So that, and across different time frames, and there are a lot of different pairs. So that diversity means I don't get many setups triggering at the same time. Dollar CAD. Let me look at this quickly. Dollar CAD. You're going to be looking at this one. I've actually got this on my list to look at. So straight away, obviously you've got, and this is always going to be a tricky one because it's very unlikely that price paused along here, isn't it? So I will zoom in a minute, but it's very unlikely we're going to have a pause below there. And obviously there's going to be nothing within here as well in terms of stop loss placement. So this isn't going to be one I'm going to be like, yeah, great. This is going to be a really great setup because there's going to be nothing along here and there's going to be nothing along here. So stop loss placement is not going to be easy either. This could be better in terms of I prefer more touches here to confirm it as an SR rather than just like 2 touches. I don't have a rule it has to be 2, 3 touches, but considering the setup as a whole, 2 touches would be better if there was a nice RBR. I mean, they might even be. Let me have a look. I doubt it, considering it was a news-based move. Yeah, no. So obviously that's the source where the news started. So let me mark that in. So I would be inclined to take this, but with a half risk because it could be a lot better. You can see this is a clear SR. Now that to me is probably too far below that area for a stop loss as well. Considering, generally speaking, apart from this, news event, this dollar CAD isn't a volatile pair. That is too far below the SR for me to place my stop loss in terms of the chances of price. You can't really say if price sits there and holds that. You can't really say it reacted at this level. It reacted at a demand down there. So that's a separate demand and potentially a different setup I'm not saying I would trade this as a setup, but that's a different area to that area down there. So that for me is a completely different setup because it's too far away than that area. So my stop loss would be higher, and it ain't an easy one. So you've got that supply over here, this decision point along there. So this is where you've got to consider volatility of the pair as well. You picked a tough one, that's for sure. Nothing like live analysis, picking one of the tough examples. So I think I'd probably place it. You can see the SR along this area. I zoom in and see what it looks like. As usual, dollar CAD's a bit of a mess as you zoom in. So even within here, there's no high momentum moves. There's no clear edge at this supply, but you haven't got much of a choice in terms of there ain't anything else information-wise to really go on. So I know dollar CAD pretty well. I know it's not very volatile. Okay, this was a massive news move because of the news that occurred, but generally it's not very volatile. That for me is a completely different setup. And rather than that, if it hits there and works out, it didn't react to here, so it wasn't the reason I was taking the trade. And from a volatility perspective, this looks about right for maximum stop loss. So say about 33s, but it's definitely going to be a half risk setup because this is not enough information to be fully confident. Like pretty much all the other examples, we had a couple of other examples when we had this, but it was a better SR. And also, not that's going to happen, unlikely. I don't want price coming straight down now. I want it, have a bit more rounded retest, but that's not going to obviously happen this time of day. If that makes sense. Aussie CAD, I'm sure I've marked up one on Aussie CAD. Yeah, it must be this one. So this is FX Pro feed. I know this looks better on my FXM feed. Ugh, I'm going to look at that time frame. But yeah, I'm going to be looking at this source of demand for an FTB on Aussie CAD as well. I can't remember if I uploaded it to my trading room yet, but I know it definitely looks better. FX Pro, I don't think it's a great feed for cross pairs. I don't know why I used it for this actually, but I use FXM feed. I like my feed to look good on. Obviously, I zoom in a lot, so obviously on liquid pairs, on very exotic pairs, doesn't matter what feed, you're going to get stuff like this. But there's a lot of difference between brokers in terms of how liquid lower timeframes look across different pairs. So for me, FXCM is a good feed in that respect. CAD CHF. I've actually just deleted that tonight from my list of pairs because I looked at my history and I was like, last time I took an FTB on that was so long ago. I was like, it's a waste of my time looking at it. I don't actually like it that much as a pair. It's one of those pairs again, which is hard to be confident over a lot of FTBs because it's not very, you don't get very many concise setups. And I'm not really back tested it that much because it's not really a pair I look at. It's not a pair of great interest. So it's very whipsawy. So it's always going to be a bit harder to be confident. Where were you looking? H1. There was a setup the other day, which I kind of watched. It was along there. Which looks like you needed a buffer. It would have hit actually. I remember mentioning that to someone else. I was just watching this one that time. It depends on its spread as well, because we'll see if it lasts back up there. But that one worked out. Where are you looking? And then were you looking down here? There's obviously hit demand down there. That doesn't look that concise to me. You were looking at this lower one. So this one here, yeah. Okay, well, it's not one that stands out to me because I'm looking for clear edges of a zone, and you can see you've got an edge there. You've got this kind of source of supply there, and then you've got this kind of lower area in here. So I will zoom in, but this is how I'd mark it up straight away like that. And I want to see how clear these areas here. Now, this move down is pretty impulsive. Obviously, it's news-based, but you wouldn't, if news, aside from news, you wouldn't necessarily expect to move down quite like that because there is demand within here. there's demand there, and there's obviously demand that started to this move here. This moves, I want to make sure that's not too close and hasn't absorbed any orders from where my entry is going to be. But you wouldn't necessarily expect this move. Obviously, it was a major news event, so that's why it did that. So it is impulsive. So that would be a consideration for me. Now if I zoom in, 11th of January, see M5 is going to be tricky to that doesn't look too great. I mean, you can see there was a source that led to momentum move out, but the momentum with which price left this area wasn't ideal. Really you're looking for something like that, aren't you? If we compare the other examples, they all occurred like that. This one's gone sideways, but this is the source of the only momentum that's occurred, and this is all a bit of a mess. And the only place to place any stop loss is below here, really. But this is the only source you can see. But obviously, this is pretty damn messy. The momentum with which it broke out wasn't very good. The move down was pretty impulsive, so it's not one I would take. Now, obviously, everyone has different risk tolerances, but it's not one I would be looking to take, especially on a pair that I just don't trade very often, and I haven't back tested. And then obviously, if you're looking for FLR, you've got to be expecting to move back up here. You can't be considering any of this because you're never going to get value. I mean, obviously, this is demand, which obviously has turned supply for the moment. And obviously, you're trading it at a time of day after a news event when momentum is obviously gone now. So you're not going to get moved to suddenly price going down like that. It's going to chop around for hours now during Asia. So you're open to the low liquidity session at the moment. But it's reacted at the only area you could really see when you zoomed in. Yeah, pound CAD's not a good one. It's a horrible pair. I don't know why I look at it. But yeah, it's not one I would. I mean, I don't spend long. As I said, I've deleted this pair now, but it's not a pair I spend long looking for setups on because it's just not. It's not a nice pair. And you can see that that it's more we had a flag back into this area essentially, a little flag, but it's not. I'd be looking for a stronger move. But then that comes down to risk tolerance. I'm not. I consider myself to be pretty picky, but I'm not related to a lot of people, if that makes sense. I'm still pretty picky within my own what I look for. I know people that are less picky than me within my trading room, especially when it comes to supply and demand zones. But I'm picky, but I still manage to find 30 setups a month kind of thing, if that makes sense. So that comes down to your own, what constitutes a setup for you, but as long as you use the same considerations, but people have different tolerances, and that's when your back testing comes into play. If you found that these work on CAD, Swiss franc, or these are tradable, then that's fine. I've never back tested this pair, and I've not really taken many trades in it, so it's not something I'm going to be confident taking a trade like this, if that makes sense. And dollar CAD, if I traded this, it would be half risk, definitely, because there's obviously what I've been through. There's obviously a lot not to like relative to the types of setups I've been through before. So there's enough there for me to say what this is definitely worth half a risk rather than full risk. But that's where my stop loss will be. This is pretty much where how I'm going to trade it. If I trade it, I'll see it. I'll look at it again tomorrow morning on my FXCM feed. So any other questions? Hopefully that's been useful. I think FTBs, they're easy in a sense because you can pre-plan everything. That's that's why I like them. I like them because they make me money, but I like them because I can pre-plan them. So therefore, for me, they are more set and forget. Yeah, I don't take every single trade 100%. I do consider other things. Don't trade Asia and things like that. But when I'm in a trade, I'm not constantly watching it. I trade them because they're useful because I can look at other things whilst I've got those setups. I've analysed it, set an alert for when price comes close, set my orders. It's not impulsive and in news events. It's fine. I'll leave it and do its thing. Pretty much. I think false breakouts, the other strategy I went through last week. I think is maybe easier to understand because there's less to consider when evaluating a setup, but it's harder to trade because you have to spot them in real time as they're about to occur. So you have to react quickly and analyze quickly, and analyzing quickly can lead to decision making based on emotions, and whereas FTBs, you're doing them in a calmness of the setup being well away from triggering most of the time. Well, I look through mine obviously every night, and most of them, they're 1-2 days before they're triggering, sometimes longer, if that makes sense. But with everything, confidence comes through a lot of back testing, going through the tedious stuff, asking questions, and practicing going forward. Like every month I build up a portfolio of setups that have occurred in the last month, both ones I've traded. I keep analyze them, look through how I traded them, how price reacted, ones that I missed, and things like that. That's the kind of thing you have to go through. Even when you're successful, you have to go through and keep fresh in your mind and keep analyzing and evaluating and spotting things, because you always pick up things. It doesn't matter how experienced you are. Yeah, there was a few FBs today. I was up really early this morning, so I didn't trade this afternoon, but there was a fair few today, depending on how you look at them. Obviously, you saw the one I traded on Euro New Zealand dollar. There's one on CAD yen, there was one on pound yen, there was one on Nasdaq. There was probably one on pound dollar, depending on how you looked at it. I'm sure there's others. So we have price hitting. A useful thing to be looking at is dollar yen whenever you're trading a yen pair. That's for sure at the moment as well. So we have a small FB, but it's going into pretty much untested supply and demand. We had a test of this edge up here, but we haven't had a material test. We have an FB. Now target wise, it's probably not the easiest one. You'd be looking at those things, but then it's compressed above here. And obviously you've got no value to this area, so you'd have to be taking it on the basis that the momentum from the false breakout is stronger than that close FLR, and then you're kind of looking to get where it got to, this supply up here. And then the stack supplies, and it's supply up there as well. But there was a few, the dollar CAD one. There's one on here which I wasn't around for. I had this one pre-marked. I mean, dollar CAD is great in a way because it has so many clear ranges. Take all this off before the news event. We've got a clear sideways range, which is very typical of dollar CAD. And this one isn't, this is one where you have to be looking at different time frames. If you look at M30 or H1, you know, now FB, move on. But that's where not having a retail mindset comes into play. It does form an FB, but just not on H1, not on something that's easy to visualize. It's hitting clear demand. This is a picture perfect setup, apart from it not forming on a visually obvious time frame, but in terms of very clear range, sideways moving market, clear decision points marking the SR, very clear demand that's been untested yet, which is close. That little dip, that little liquidity spike down, and it's actually, I don't know, 1 hour, 45 minutes, whatever time frame, but pretty much it's complete. IM5, when it comes up here, then you have the retest, the scene of the FB, and then it shoots up. Well, you've got the news event that took it up much higher. Otherwise, you should be looking up here. It kind of depends. You obviously know the news event is coming, so you've got to make a decision. Are you willing to hold it? Now, FBs before news events can be a good thing. I certainly wouldn't trade an FTB that was about to trigger before a news event, but an FB, I would be inclined to do it. One, your risk reward can be massive, so it's worth the risk in a sense, if that makes sense. From a risk probability perspective, it's worth the risk of a 1 hour loser compared to a 6 hour winner. You've got to bear in mind your slippage, and that depends what broker you use, whether you use a market maker or an ECN, how tight is your stop loss, is there a chance you get slippage, therefore you don't kind of want to have that risk going into it. A 1R loser could turn into a 3R loser. You don't want to risk that, that's just stupid. But this is obviously going to be my FLR before the news event, but obviously this hits at the news event. So, it might be a case I'll take half off, keep my stop loss down because you might get some whipsaws. You don't obviously in this case because the news was very clear in terms of what he said. But you've got to bear in mind whipsaws and that. So it's down to the individual in a sense. And I said, I don't run trades very often. So, I mean, my Euro New Zealand trade it went further than what I took profit. I actually would have held it longer, but I didn't realise it was moving so fast. So, where is it? This fee is nowhere near as nice as my FX then. And this is one, as we said last week, in terms of there's no demand for left to be looking at. It's a clear swing low point, but you can see the strength of the rejection here. It's very strong rejection. It's a little bit impulsive move down, but that rejection just stands out to me as much stronger than that impulsive move down. Then I took profit at that area there. I would have held some of it, considering how strongly it moved, and tried to target back up to there, but it hit my TP, and I have an alert when orders are triggered, and I didn't expect it to move quite so quickly. Yes, that's why I moved from Miranda, because I didn't get that previous Euro New Zealand FTB because of Miranda. It's new spread widening. I think that's not my style, and it's not how I grew my account, and it's not how I would recommend others, because I think that's a bit of a hit and hope in a way. Unless you know how to objectively try and catch 3 to 6, you're kind of taking the trade, getting to break even or whatever you do, and hoping it goes, and then if not, goes to the next one, I hope it goes. And do you see what I mean? It kind of has that hope element to it, which I don't like. And I don't like putting pressure on the trade. So the other way of doing it is risk a lot per trade and be really picky. But then you've got a shed load of pressure on every single trade you take, which increases the chances of you either getting too scared to take a trade or messing up the trade management because you go into a bit of profit, it's 10% in your account, you haven't taken a trade for 2 weeks, or your last trade was a loser. It's really important. The chances are you're not going to let it do what you should let it do if you didn't have that pressure. That's my experience of working with people and myself. So for me, it was more about risking less, a lot less pressure per trade, but trading like a maniac. In terms of just trading everything I could see that where the probabilities were in my favor. Now you have to have some luck when you're growing an account. There's no doubt about it. You can't do it every single time. I certainly wouldn't want to do it again, and I'd probably fail the next time I did it, because you do need an element of luck. You need to get off a good start. I got that. I got into a lot of profit very quickly when I did mine. And then if you start losing very quickly, then obviously the psychological element comes into play, because obviously you could be 20-30% down fairly quickly, and then that obviously becomes psychologically harder. But personally, my opinion is, I think a better way is to risk less but trade more frequently. If I can find 30 setups, I'm not trading just FTBs. Now, I'm not very good at spotting FBs in real time either. I've taken one FB this week, but there's been tons, but I'm rubbish at spotting things in real time. I don't have a concentration span of a goldfish. I hate sitting watching markets all day long. So I do miss a lot of things, but if you have that dedication and that motivation, which you obviously do have if you're growing an account, because you're doing it for a reason, there's a lot of you can find a lot of trades by not trying to push it, if that makes sense. Rando are worse because for spread widening, because they used to have, I think they switched to dynamic spreads now, but they used to have automatic spread widening at news events. So you'd automatically get 10 pip euro dollar spreads at NFP regardless. So you wouldn't get necessarily 10 pip on any other broker. So the spread widening wasn't it wasn't related to the underlying quotes they would have got from their liquidity providers, that's for sure. Whereas ECNs obviously are passing through the quotes they're getting from their liquidity providers, so there'd be much of a muchness between different brokers. Whereas Oanda were just having fixed, wider new spreads, which were just ridiculously wide relative to what you got elsewhere and relative to what they would be getting from their liquidity providers. And that's why that, and just some slippage on trades, and just I just lost patience with them, so I moved away from them. All right, any other questions? Otherwise, I will call it a day. It's been quite a long one, but I hope it's been useful. And I've got one next week, which is end of month. So next week, I'm just going to just summarize all the trades I've taken this month, and setups, in particular, setups that are interesting from a learning perspective. You know, not 30 setups with exactly the same setup, because that's also getting a bit tedious, but something that shows you something different, because obviously different setups, like today, when we look through different entries and stop losses, you can generalize how to look for it, but obviously some setups have different nuances. So I'll go through January in terms of different setups for FBs and FTBs. Yeah, this webinar was recorded, and I'll send the link round because it's via Omnovia, so I'll send the link round to tomorrow morning. Okay, take it easy.